Yo guys, what's up? I thought I would post a quick video about lower time frame confirmations from sort of higher time frame order blocks, and just sort of when to realise a trade is gone and when it's not, and also when the optimal time to get in is according to the order flow. Because I think one of the sort of issues I see throughout the community is always trying to be the first in the trade. And you don't have to be that, you want to wait until structure and order flow shows you that it's ready, and that the trade is actually valid. And some people seem to get a little confused about when that is, and it's something I've been putting on a lot of work on recently, because I think it's important, and I think it really does give you, if you test it enough, that real confidence that your trade idea is valid and that you've got the highest probability of it actually playing out in your favour. I'm going to focus on GU today. A buy that happened a couple of weeks back, something like that, and yeah, I think it's a very good example of just waiting for the market to really show its hand. So on daily, you can see that we're pretty bullish, been putting in higher lows and higher highs. We came down, broke this structure here, broke again here, creating this swing low, and then sort of started pushing back up, creating higher highs and higher lows on the way up. So we then come on to the 4 hour, and I just want to take this bit off. And you see here that we've got, sorry, let me remove that, that we've got a break of structure to the upside, right? So it's like, where is the valid POI here, right? So in my opinion, you have two, right? I would always take the extreme, unless it's been mitigated to sort of the 50%, which this one just about hasn't. It just misses the 50% here. I would always say that this is definitely what you would call the extreme, right? And you've got this one as well. Of course, that it creates the imbalance and stuff like that. But both are very valid sort of points of interest. And with higher time frame stuff, we're looking more for sort of areas of interest rather than taking just a risk entry off a 4 hour block. As we want that really, really good RR, and we want to be able to get in with the market showing us its hand, right? So yeah, if we go down onto the 1 hour, no, sorry. You can see that we do, we've got two even more valid points of interest, this one and this one down here, right? Again, this is the one that created the imbalance and all that sort of stuff, but the move really started happening from here, right? This is the point on the 1 hour that this initial high was breached and closed above. So for me, it would definitely still be worth having a look and having that marked out and just seeing how price action sort of reacts when we get into it, right? I always sort of say that confirmation entries are best. I still believe that. Yes, there's a case for risk entries. They can be very profitable, but I would always prefer to see the market show its hand and let me know that it's ready to sort of push to the upside. So if we continue moving through price now, you can see here that we've pushed in quite heavily, right? I mean, at this point, as soon as we came into it, I'd already be on the sort of 1 minute time frame, just having a look at what was happening, how price was reacting, and what sort of things, is the market showing me at that point. All right, so And see here, we've got this large impulse to the downside, and then we start correctably moving down into the order block, right? At this point, I would definitely be on the 1 minute. And for me, I would be classing this point up here, really, as initially the swing high that I would want broken before looking to take any buys from there. So I'd have my structure marked out. Sorry, I like this point here because this is the point that broke this low here. So unless this point is breached, I wouldn't really be interested in buying it because of the amount of momentum that we're seeing to the downside, right? So then we come in, we retrace up a bit, and we continue to sort of generate liquidity down here, right? So again, this would be ideally at this point, unless we sort of categorically close up above that this high here, I would want to see this liquidity swept, right? Because you know, that's something we want to see, right? We want to see the BFI taking the liquidity and filling their orders before they're ready to move up. So we continue to push up, and then again we start to range a little bit, and eventually we come down and we break this low again, right? So sweeping the sort of sell side liquidity here, which is brilliant. All the sort of things that I want to start seeing, right? So at this point we have broken this structure here, right? And it's about looking for the right sort of structure. Remember that M1 can be very noisy. It can be difficult to read at points. So just wait, be patient, right? That's all you need to be, right? So at this point here, I would have this as my swing high, right? I wouldn't necessarily look at this because this is, yes, it's structured, definitely. It's a pullback, but it's on the 1 minute time frame, and it's, you know, on the 1 minute structure, as I said, can be very noisy and it can be very difficult to read. So just practice a little bit of patience with it, right? So I would have this as my swing high, right? Ideally, again, I would want this breached before looking for buys, because that's the point where the last real injection of sales started, right? So that's the last point that the money is at. You know, we can start saying, yes, once it breaks here, we can start looking. Fine. For me, I would ideally like the swing high broken always, just because it's safer. You know, I like my money, I want to look after it. We come down, we then sort of start creating somewhat of an accumulation schematic. Again, I'm not going to really search it, mark it all out, because I don't think Wyckoff is a tool. I think structure and liquidity are the most important things, and Wyckoff should be used as complements if that's something you want to look into. So then we push down, again, breaking structure here. For me, I would still have this as a point that I want breached, ideally. You know, yes, this is definitely another sort of point of interest now. So with the right confirmations, I would potentially be looking to get in after this area is broken. So let's just carry on playing price through and see what it does. Right, so this is where the devil in the details really comes in, right? There's tiny, tiny little things here that will show you what is happening, where price is moving, what it's doing, what banks are trying to do, and what they've accomplished already, right? So here we break this sort of high here, right? And we push up. We've got imbalance here, great, right? So I know a lot of guys would probably try and get in here or here, which is fine, you know, perfectly valid entry, but, you know, you don't always have to be the first one in the trade. You can just wait a little bit, let the market really, really show its hand, and then we can look to get in at a safer place, right? So again, if you had your order here, fine, absolutely nothing wrong with that, perfectly valid area. But then price sort of pushes away, right? Breaks structure again. So The interesting thing here, in my opinion, is that the imbalance, although not filled here, is somewhat mitigated, right? Because this actually comes down, this candle here comes down a tiny, tiny bit below this wick, right? So it comes into this unfilled imbalance, which would show me that it is somewhat mitigated, right? It won't need to fill up the whole of that imbalance straight away, right? Because it's accomplished its objective there. It's rebalanced this little bit of the market, not by a lot, but it has done that, and then it's broken structure again to the upside, right? Then there's a couple of really interesting things that happen, right? We break structure, then we try to push down again, but we get this big engulfing candle, right? What does an engulfing candle tell you? It tells you a couple of things, right? It tells you that someone has tried to sell the market and someone with larger interests has pushed it back up. It's also taken liquidity on like the very low time frames from below this low, right? Mitigated this imbalance here, right? Not tapped into this again, but it's somewhat mitigated this, right? So for me, I wouldn't be looking at this area anymore. I definitely wouldn't be looking at this area now because we've had this big push up. We then get an inside bar, which I've spoken to a few people about. It's just a theory I'm working on, but for me that shows a range on a lower time frame. So, it's either going to continue pushing down from here, or this is where they've stacked buy orders after the engulfing candle, and they'll look to continue to push up from here, right? So price pushes up, right? Messes around a little bit, creates some form of liquidity here, not technically equal lows or anything like that, but there's definitely some form of liquidity resting below there, right? So what would I be expecting now? I would be ideally expecting some form of mitigation of this area, somewhere in here, somewhere in this inside bar or somewhere in this wick. I wouldn't necessarily be confident taking a trade from this inside bar because of this, and because this swing high over here is still not breached, right? We've had a fair bit of bearish momentum. Yes, we're going through accumulation now, which is great. All good signs that that there's definitely intent in the market. We break structure again to the upside, right? So it's starting to look really, really good for buyers, right? And so let's just, again, I wouldn't be comfortable taking a trade from here or here just because my stop would have to be too big to cover that. There's still this little bit of imbalance down here, so I'd rather see how price reacts to this and then see if I can get a trade afterwards, right? So price comes down, takes the liquidity from below here and mitigates this inside bar, right? So what's that showing you? Now, for me, that is showing order flow, right? We've had a series of breaks of structure, a series of mitigations, right? Mitigated this imbalance, mitigated this inside bar, broken structure here, will break structure here. And that is then to me starting to say, right, brilliant, let's start looking at an entry here. We then break this swing high, right? So if you think about it like this, if the market was going to make lower lows, right, and continue the bearish momentum, this area here should never be broken, right? It should just continue down, right? Let alone this area here, this area here, this area here, whatever. Like, it should just continue on down from somewhere below this. This is like the last line of defense for bearish intent, right? Because that's the last place real momentum kicked into the market. Okay, so again, we've broken more structure here. And on the way up from this, we have created a lot of imbalance, right? That would definitely be saying to me that I would personally be looking at this specific candle, mainly because it's what I would class as a sponsor candle. I've spoken about it again in a couple of things, but it's a candle that's more bottom than wick and takes liquidity. Sorry, I've got that fib on, which looks just beautiful, doesn't it? I would always take the 50% of these candles, just because for me they tend to, sponsor candles specifically tend to get mitigated to the 50%. I don't use the equilibrium of most candles, just because I personally don't agree with the theory that all 1 minute order blocks need to be mitigated to the 50%. I think specific candles do. That's just my opinion. But look, let's just play price through, right? So I would then just be waiting. I mean, at this point, I would have set an order, definitely. I would be even more comfortable if we get some form of liquidity generated underneath. And I mean, for me, I wouldn't feel the need to put much buffer at all below this. Maybe enough to cover spreads, something like that. Because my idea would be that if this low is going to be protected, as I think it would, because this is the low that really caused this swing high to break, right? So this should be protected. This is the last place money stepped in, right? We've got a push down, right? Another push down, a break of structure, a mitigation, an engulfing candle, an inside bar, a mitigation of the inside bar with a liquidity grab, right? So this, for me, would be the last place that the large interests came in, stepped into the market and said, right, we're going to take this up now, right? So I would not feel the need to cover, say, down here, anything like that. My stop would be just here, just enough to cover spreads. Just in case we do come to mitigate the bottom, I wouldn't want to get stopped out for that. But I would have enough confidence in my analysis that, you know, this low will be protected. That's what my testing shows. That's why I tend to not use a lot of buffer and stuff like that. Because I have confidence in my analysis, right? So we then break structure to the upside again, just showing more and more intent. Generating sort of more liquidity down here as well. As I've said previously, there is liquidity beyond every high and every low in the market, right? What makes the market move? Money. Where does the market move from? Highs and lows. What's beyond the highs and lows? Money. Stop losses, breakout sellers, all of that sort of stuff, right? So we then push up, break structure again. But notice we haven't actually mitigated this yet. Even here with this candle, we don't fully mitigate, well, we don't mitigate any of this imbalance left, right? So let's just see what happens on the next candle. Right, so we get filled there, right? And then it's like, where do I think that is going to push to, right? We're playing from a bullish 4-hour trend and daily trend, right? We've broken structure to the upside. So, you know, like Blackwatch says, what would be the expectation at this point? The expectation would be to make higher highs on the higher time frame, right? So my target would be the highs somewhere. Oh, I can't find that. Sorry about that. My target would be the highs up here, minimum the highs up here, potentially further. But, you know, that's a safe place up here. We've also got liquidity resting there, right? So market targets liquidity, obviously. So my target would be up here, right? 1 to 33. Nice trade. Yes, okay, you can say that the reasoning behind it is somewhat more complex, but it's safer, you know. It's like saying, right, none of these entries, or this entry wouldn't have been filled, right? Because if you took this entry wouldn't have been, or this entry I wouldn't have been comfortable taking. And this entry, it's never going to come back down to it, or not, you know, in time to fill your order, right? if it comes back down to here, you're asking it to break structure that broke the swing high, right? So are the large institutions going to allow that to happen? Probably not, because they've got vested interests in that area now. You know, this is the last place they stepped in. They don't want anyone getting in at a better price. One interesting thing that me and some of the rest of the team are testing is how we break structure as well, with what sort of momentum, right? So here we break with low momentum, right? We break and then start retracing straight away. We then break again, start retracing straight away, then break again and start retracing straight away. And one theory that we're working on is oftentimes if we break in that way, we'll come back to the decisional order block, right? Which would be this one, right? The extreme would be down here, right? If we broke with higher momentum, I would then potentially be waiting for more confirmations to show that the trade was valid. But this, on top of everything we've talked about, the series of mitigations, the series of breaks of structure, the imbalance, the liquidity grabs, the fact that there's resting liquidity above the order block and all of that sort of stuff, would show me that this is going to be the area that's protected, right? So that to me is how I would build a story around lower time frame confirmations and lower time frame order flow, and really sort of following the money and seeing what happens and where we're going to go from here, right? I mean, this trade I already know never comes back, but we can play it out a little bit. You know, there would have been other scaling opportunities here, and you can just see by the amount of intent in the move up that it's never going to come back to test that low, right? The only place it comes back to test are sort of these areas where you could potentially scale in, you know, like here would have been a valid scaling because this is the one that broke the next structure and so on and so forth. Right, so let's just go on the hourly and see that runs to target. And it's just about managing your expectations as well. Because say you wanted to, you know, say you've done all that analysis and you were like, right, let's just take this to the 15-minute high. For me, yeah, great, 15-hour trade, brilliant. But that's cutting it short. You've got in at what is potentially a 4-hour higher low. So why would you want to let your trade sort of not fulfill its whole potential? You know, the expectation when you have got in an area that should be a higher low is that it will make a higher high, right? So once it sort of pushes up past here, then, you know, yeah, I'd be thinking about pulling at least 80-90% of the volume off the trade, if not all of it, because, you know, it's a great trade. It rallies up. You know, you don't need anything else than that. You take one or two of those trades a week and you're golden, right? Rallies up, hits target, you know, and continues to push. I think this would have run for a 1 to 50, something like that. But, you know, I would be more than happy personally with that trade. I apologise if you can hear my chair squeaking. Sorry about that. But look, I hope that sort of explains a few things about what I look at for trades. Again, if there's any sort of questions that you might have about it and anything that you would like to chat a little bit further about, feel free to DM me. Feel free to drop questions tagging me in the questions part. And yeah, I hope that sort of clears up a few things of just knowing when a trade's gone and when it's not. Because I know a lot of guys would be saying, oh, that trade just left without me, blah, blah, blah. But at that point, it really hasn't. At that point, it's, you know, at the entry I took, that's the first time the trade is really ready. It's the first time the real true swing high has been broken. You know, if you want to look at it from like a 5-minute perspective, sometimes that can help as well because it gives you a better idea of structure, right? I mean, at this point, yeah, you could say this was the swing high, right? And it gets broken here. But you'd be looking at this and it would never come back. So again, it's noticing order flow and noticing reading the story, right? There's all of these little details you need to take into account that really factor into trading. I mean, this way of trading isn't simple. It's not, it can be simplified, yes, 100%. But for me, if you're trading from like higher time frame value areas, order blocks that break structure, have imbalance, or cause imbalance at some point in the move, and all of that sort of stuff, you're always going to be in a better position. And then it's just learning to read the story on the lower time frames. I really hope that helped. Yeah, let's all have a great week, guys. If I don't sort of do another video before Christmas, hope everyone has a brilliant Christmas, brilliant New Year, and let's all smash 2021, because I think the community is going in very much the right direction. I've personally never felt more confident in my trading. I know quite a few people are feeling the same way, which is always brilliant to see. And much love, guys. All right, take care.